Okay, in this video we're going to go over the portfolio merge documents, which are used to combine strategies and analyze the performance of the different strategies together. We're going to combine three systems. Here is the equity curve for a FX Scout, which uses percentage trailing stops and some money management techniques to create a relatively smooth equity curve and profit targets. But the average trade net profits are not quite as big as TradeMaster, which you've seen before. Scout has a higher percentage of profitable trades than TradeMaster, but TradeMaster takes bigger wins. We're also going to add a system called FX Razor, which has a lot of trades, relatively low average trade net profit, just over $100, I believe, but the equity curve is really smooth, which will make our system more consistent. Here you see the FX Razor with over 1,500 trades. So what I'm going to do now is open up Portfolio Merge. FX Razor is this Euro USD 14-minute strategy, then TradeMaster and Scout. I'm going to use initial capital of $75,000, and I'm going to use a start date of 12/2/2002 to 5/18/2010. I can change that, but this should just give us a general idea. It doesn't really matter, but I'd like to have at least 5 years of data. I can change this. Let me change this to 5/20/2002. I hope I have enough data there, but I'll just go ahead and use that because that'll be a full 8 years. Portfolio Merge is combining the trades from each one of the different systems to create a portfolio performance report, which is much the same as TradeStation because it's pulling all the data from TradeStation, but it does do some interesting things, and I want to go over those with you, and that's why this video should be helpful. I'm going to let this finish. I'll be right back. Okay, now the performance or strategy portfolio performance report has been completed. We're trading one lot on each of these systems, and it looks like a trading period of 7.99 years. The total net profit is $433,000, a real respectable figure. Profit factor is over 2. Max drawdown. Now here's why combining strategies I feel is so important. Max drawdown on the portfolio of systems, these three systems, is only 5,372, so we've reduced that from TradeMaster in and of itself, which had a max drawdown of about 8,000, maybe a little bit more than that. I'm just going to kind of run through some of these things that I like to look at. Here's the equity curve before any slippage and commissions, but you add slippage and commissions, it'll still hold up. Monthly net profit, you'll see by adding three systems that use different logic that we cut down significantly the number of losing months. And then here you'll see just a monthly profit distribution. You'll see some months, I think there's a total of 9 months here that were unprofitable, maybe 10 months, but the remainder of months were all profitable. And the largest bar here shows that the most months of between 27 and 30, you make an average of $3,000 to $6,000, which is very, very good. I'm going to go back to the performance summary. You look at percentage of profitable months, 89%, which is a lot better than you can generally get. With trading the stock market in and of itself, it's very consistent. We'll profit in either an up and down market. You can also lose money regardless of market direction. But if you select your strategies very, very carefully, you'll have a really good setting. There's one other thing I want to look at, and that's the correlation analysis. Correlation analysis will give you an idea how these systems fit together. The closer to 0 these numbers are, the less correlated they are. If they're close to 1, that means they'll always take the same position. If they're close to -1, one system may go long while the other one goes short. So the closer they are to 0, the better. Here we see that the max correlation is 0.32, which is relatively low, and so this would suggest it's a good portfolio to use. That's Scout, TradeMaster, and FX Razor. Thanks so much.